My name is Albert. My name is Albert Waweru, and I'm a financial advisor with Britam. Welcome to this session this morning. I'm here with my colleague Nancy Wachira, and we want to take you through the financial wellness talk. I want to start by introducing Britam. Britam is one of the biggest insurance companies in this country. It began in the year 1965 with just a small one branch somewhere in Nairobi. It has since grown into a big institution with diversified financial solution. So we are in 7 countries. The main business is based here in Kenya, where we offer different solutions. We have 3 subsidiary companies. We have the general insurance company, where we take care of the risks in the various sectors of the business. We also have the life. Actually, we have Britam Life Insurance, which is the biggest in this region. And we also have Britam Asset Managers, whose main business is to invest the various and offering various solutions in the financial markets. So maybe just to introduce some of our partners in the business, as you may all be aware, Britam is a publicly listed company. But you have institutional strategic partners that have put interest in Britam. One of them is Swiss Re. Swiss Re is the world largest insurance company. And they have bought a huge stake of about 15.8% in this company. The other partner is Africa Invest. Africa Invest is the biggest private equity in Africa. They have a stake of about 19.5. Then we also have IFC, that is the World Bank investment arm, which has a stake of about 8.9. So basically what that means is that we have a very strong support from some of our shareholders who have a lot of confidence in the business that we offer. Of importance is that this year we are celebrating the 60th anniversary, and that tells a lot about what has been transpiring in the company over the many years when we started from 1 branch and now we are into 7 countries. So that is the bit I can talk about in terms of introduction, but we offer financial services across the region. So I want to take this opportunity to introduce my colleague who will take over from there and take us through the presentation. Nancy, welcome.
Yeah, good morning, viewers. My name is Nancy Wachira. I work with Britam. Today we are here to talk about financial planning awareness. It's a very broad topic, but I'll try to be as brief as I can. For anybody who is trying to invest or save, before you decide on the company or the institution where you want to put your money, it's always important that you understand the basics about financial planning. So today we are here to just take you through what we do here in Britam. This is my 10th year in Britam, guiding people on how to invest, where they need to put their money, and my title is a senior financial advisor, having worked here for the last 10 years. So today, we are not going to discuss the products that we offer. We are going to just briefly take you through what you need to know before you engage in any form of investment or savings. I want to share a slide with you as we go by so that you can be able to follow with me. Kindly confirm you can see my screen.
Yes, we can see.
Thank you. So here we are, financial planning awareness. That is where we are starting from. And we're saying that the best way to predict the future is to create it now. This is a quote according to Peter Drucker. And I'll take you through what is financial planning awareness. It involves creating a roadmap for your future, where it includes setting your financial goal, both short-term and long-term. And then you need to assess your current financial situation. Then you need to create a budget and a saving plan. Then you need also to look at how to manage your debt and credit. You also need to do investment and retirement planning. And also we need to think about risk management. This is where we talk about insurance and creating of emergency fund. Next, we talk about how will now the financial planning awareness help me as a person or help you as a person. Financial planning awareness will help you achieve financial stability. It will also help you reduce financial stress. It will help you make informed financial decisions. It will help you secure your financial future. And also, it's important to note that it helps you to take control of your finances. It also helps you to make intentional decisions and be able to work towards your goals. Then next, we are going to talk about, when we talk about the future, what are the things that we need to plan for? Number one, you could be planning to start a business, or if you're already in business, you could be thinking about how to expand that business. You could also be thinking about buying, whether you're going to buy or build a residential home for your family. You're also thinking about education planning for your children. Then the other plans that we have for the future is probably you need to think about, you have a project, you want to buy a car, you want to start saving or getting ready for your retirement. These are the things that as a human being, we think about. So they need to be thought about along the way. So how do you fund your future? As we look at tomorrow, what are the options that you have to fund that future? You can either decide to borrow to fund your future, you can decide to save, you can decide to invest, or you can still decide to do nothing about it. But every option that you pick is going to have a price on it. So for example, let's take an instant where you have a project that will cost you 8 million. The options that you have, number one, you can decide to save and get to your 8 million. Of course, it takes time. And number two, you can decide to invest. For investment, you probably need to start with 5 million, then there will be an interest of plus 3 million for you to be able to achieve your goal of 8 million. Then there's someone else who will decide to borrow the 8 million and pay with a very high interest of around 3 million. So at the end of the day, they will have instead of the 8 million, they'll pay when it's 11 million. So the choices that we make has a cost. So when you're thinking about planning for your tomorrow, you need to know and to assess yourself on the best way to go about it. Then you need to find out where you belong, which league are you in. We have people who are big savers. Then we have big spenders and the big borrowers. Every opportunity has a cost. The borrowed money comes, of course, with high interest rates. When you save money in an account somewhere in the bank, you're going to miss on the interest that your money should be earning. And yeah, when you spend the money, if you're a high spender also, you're missing on the interest on that money that it could be making. Then we need to look at the individual investor's life cycle. Here, we are talking about the fact that we are in different phases in our lives. and we need to know what we need to be doing at every phase of our life. So there is immediately after school, from the first employment or the first job that you get, or the first business that you start, from the age of 20 to 50, this is where you're supposed to, it's called the accumulation phase. And then from 50 to 65, this is the consolidation phase. And then from 65 to old age, this is the accumulation phase. Each phase of your life, each stage requires different investment strategies, and the risk tolerance is also different in every phase. Understanding your current state can help you make informed decisions. So our work as financial advisors is to assess you, get to know the phase that you are in life so that we are able to advise you on the best products that you can buy at that particular point. So I want to delve deeper into the cycle and explain what is accumulation phase and what you're supposed to be doing. This is, we said, is the age between 20 and 50. You're supposed to focus on building wealth. You're supposed to be saving a lot and investing for long-term goals. Here in Britam, we have very good plans that can guide you in this area. Then we have the second phase, which is the consolidation phase. This is where now you're supposed to be, you've already invested some money and you've already bought some assets. So you're supposed to be consolidating your wealth. You reduce the debt and also start thinking about planning for your retirement. Then this is a stage where you're supposed to think heavy on protection of your wealth that you've already created in the first phase. And by protecting your wealth, I mean, this is a time you need to think about ensuring your businesses, if you're in business, buying health insurance for you and your family, just to make sure that you're protecting what you've already built in the event that something is to happen to you and your loved ones. In this area, we are expertise because on the Department of Insurance, this is what we do. We insure your businesses. We have medical insurance for your health and your family. Currently, as we all know, our businesses are at risk, whatever is happening in the country. So this is an area that we really need to focus on. Our businesses are at risk. We don't want to go back to where we started from the scratch. So everybody who is in business and you're listening to me today, this is a high time that you need to think about insuring your business and your property so that then we don't waste what we have worked so hard to create. Then the last stage, which I said is from the age of 50, no, sorry, from the age of 65 going all the way to 100 years old, whatever time God has given you. It's called the deaccumulation phase. This happened after retirement when you will be using the accumulated wealth for drawing your income, your regular income to meet your living expenses. Remember, this is the longest holiday of your life. There is no more paycheck if you're employed. And even for those who are in business, at this point, we are talking about reduced energy because of age. So you'll not be able to run your businesses the way you're doing as age catches up. So we need to have created a good investment that can sustain us going forward. So then at this point, you need to know how to protect your wealth. We've already said at the accumulation phase, we are doing a lot of savings, we are doing a lot of investment and buying of property and assets. Then the second phase, we've consolidated that and we've also ensured what we have been able to create. So then we need now to protect this wealth that we have created. And how do we do this? Number one, diversify your investments. Don't keep all your investment in one place. Spread through examples, things like stocks, real estate, you start businesses, you can do money market fund, you can do bond. And then also we have the long-term savings that is offered by insurance companies like Britam. And number two, you need to use legal structures. Set up limited companies to separate personal assets from business risks. Yeah, this is very important because if by any chance the business get into debt, and if you don't have a limited company, the liability comes back to you as an individual. So it reaches a point you have to separate yourself from the businesses that you are running through the limited companies. Then from there, be cautious about the investment scheme that promise, sorry, just a moment. We are saying that the other point is that you need to work with professionals. I have a personal financial advisor for matters saving and investment, and this is our work. Myself and Albert will guide you through this area of investment and savings. Then have a tax professional for matters tax. We know what is happening currently. If you've not been filing your returns well, this is an area that can really help somebody. Then have an estate lawyer for matters estate planning. And in case you need more information on setting trust funds for your family, we can be able to help you. Then beware of these scam quick investments. Be cautious about where you're investing your money. There are so many schemes nowadays that promise quick wins and beyond the market returns. So you need to be informed before you decide on where you want to invest your money. Make sure that you have done your research. How long has that company where you want to put your money been in existence? We said Britam is celebrating their 60th birthday. This is a company that has been tested and tried over time. So before you make those quick fixes and you promise very high interest rates, think about the period of existence of the company where you want to put your money and also their financial muscles before you invest your hard-earned money. The other thing we need to think about is how to, when we are talking about still protecting your wealth, you need to avoid bad debts. That is, eliminate high interest debts, only borrow to build assets, but never for consumption. We all know what debtors can do if they are not kept in check. I think I've covered the part of protecting our wealth. So this is what we do. Basically, we do need analysis. We sit down with you, take you through what you need to know so that by the time you are agreeing on probably the investment or the product that you need, you already understand well. So for us to be able to save and invest, there's a tool that we use. It's called the Financial Quadrant. It's a tool that demonstrates the key financial areas that need to be taken care of as one seek financial freedom. All of us, we are seeking financial freedom in the future, that we're in a position whereby we are able to meet our expenses, we are able to save, we are able to plan for our future without any problem. As we seek financial freedom, we need to understand how to manage our finances using the financial quadrant as outlined below. How much money are you spending on expenses? How much are you spending on savings? How much is going towards your planning for your retirement? And so on and so on. So managing expenses is key to setting up the path of financial freedom. It's not what we have, but rather how we use what we have. Do you have a system that adequately tracks your expenses? Ideally, the recurrent expenses should not be more than 30 to 40% of your total income. For example, if someone is earning an income of 100,000, you should never spend more than 40,000 on expenses. At least limit it at that so that then we are able to meet the other part of the quadrant that need to be taken care of. The other part of the financial quadrant that need to be taken care of is the part of insurance protection. This is where we are talking about the loss of a key breadwinner in the business or in a household, an expensive hospitalization, loss or damage of property, business interruption, income interruption. They all create major financial demands. The business should be able to continue whether the spouse is there or not. The kids should be able to go to school and everything should happen. How do we do that? By taking up insurance. This is where we are talking about taking whole life insurance, where in case of demise of the breadwinner, the family remains financially stable. We are talking about education planning for your children's future school fees. We are talking about insuring your businesses, as I said earlier, so that in case of any disruption, you are able to start all over again without much stress. There's so much that we do here in terms of insurance, and we will be able to guide you on that sector. Then number 3, the other quadrant that we need to take care of is about retirement planning. And the question you need to ask yourself is, are you prepared for the longest holiday of your life? Because it will definitely come. So here in Britain, we offer very, very good retirement packages where we work with you the journey from when you're young. You can start something immediately, you start working, that you target towards your retirement kitty. And even if you're advanced in age, we will still guide you on how you can be able to build a good retirement kitty, so that then when you retire, you will be able to be drawing some money from that kitty. So retirement is something that we don't wait for to get old to think about. We are supposed to start planning for a retirement immediately we start working, or immediately we start businesses. So have an amount that you set aside every day towards that sector. Then savings and investment, another quadrant that is very, very important, where we are saying savings is preserving money for future use in cash and all cash equivalents. Investments refer to buying assets whose value can fluctuate. And you're told that the savings component should involve between 20 to 30% of your total income. The best remittance method is a check-off system that ensures the money is not seen or touched and cannot be easily accessed, such that saving becomes second nature. Savings and investment are a key component of financial security, but are impossible to do without managing expenses. So we really need to learn how to manage our expenses. It's a whole new topic that we can discuss another day, where we take you through how to manage your expenses. You can use a budget. You can trace how you're spending your money, and it's a different topic that we need to cover another day. So that is a quadrant that we all need to take care of. Those are the things that we need to take care of: the expenses, savings and investment. We think about insurance, and more so for insurance, I'm still insisting. Particularly, your businesses need to be insured. Health insurance is also very key, because we have seen families that were initially very stable, and an ailment comes in the family and the hospital bill is too high that they are forced to sell their assets. So what do you do to avoid that? Have an adequate health insurance for you and your family, such that it covers the most part in case of any eventuality. Even before you can get out to ask for help from friends, you've had a good cover that has taken care of most of this hospitalization bill. So what is the way forward? You need to set up a system to track where your money is being spent on a daily basis. You can do this first, start with 30 days. You can be collecting all the receipts that you use, or have a pocket diary, or maybe just decide to make your payments using the M-Pesa. That way you'll be able to follow up, and you can be able at the end of the month to say, where am I spending most of my money? The reason we are doing this is so that then when we are able to manage our expenses, we'll be able to have some money left that can be used in the other part of the quadrant. Otherwise, the expenses will keep going up if they are not managed well. So you need to group your expenses also in necessities, adaptables, and expendables. Assess income and access totals to see where changes can be made, identify the gaps, and then at the end of it all, we see the spare money that we can put in other avenues. So there is a graphic story there of 100 young people today, aged between 25 and 29, and then we see them later at the age of 50. And the research shows this is what is likely to be the scenario. 1 person will be rich, 4 will be financially dependent, 5 will still be working, 12 will be broke, 29 will be dead, and 49 will still be dependent on friends and charity. So this pyramid is just trying to show us that if we are not careful and we don't plan our finances early enough, we might end up working when we don't need to work, when we are supposed to be resting. But if you start early, then you realize that you'll be able to live a better life. The best time to plant a tree is 20 years ago. The second best time is now. And that marks the end of my presentation. I will send it to the email so that you can always go back to it at your own time. Our contacts are also down there. At the far end of our presentation, you can see my name and Albert's name and the contacts below there. So then we can be able to engage one-on-one so that we be able to guide you on what you need to do and assess your situation. The key point here is no one is late. We will advise you accordingly depending on where you are, the age bracket where you are. We'll be able to sit down with you and guide you through. So for today, we just needed to do that brief so that you know what you're supposed to do at the particular point that you are in life. Then if we get another day, we can take you through now the products that we offer in every stage of your life. But for today, it was just briefly introducing you to the financial planning awareness or financial literacy, so that then before we start this journey of financial journey, then we are able to know the areas we need to concentrate on so that we can be able to get to financial freedom. We are all journeying towards that sector whereby when we retire, we don't have to depend on other people to survive. So thank you very much. I'll take any questions that may come from my presentations, and then I can handle it back to the moderator. Any questions?
Thanks so much, Nancy. That was so insightful.
Yes.
Very eye-opening. Yeah, very, very informative. So this is time for questions to Nancy. You can also put them in the chat, please. I see Eva Gotho saying that thank you for the presentation. Very helpful. Thank you so much, Eva. Any other question, please?